In our last lecture, we started discussing about clubbing provisions which are contained in section 60 to 65. Now let us continue. We started discussing 64. There we discussed 64 subsection 1 class 2 and we were discussing 64 subsection 1 class 4. Point number 7. X gives is fixed deposit gives fixed deposit of rupees 100 lakhs to his wife Mrs. X on the FDs with IOB, Indian Overseas Bank. FD with IOB to his wife Mrs. X from Indian Overseas Bank Madam will be receiving interest. Madam will be receiving interest. Say the interest received rupees 10 lakhs. She receives interest. Then that interest she has invested in this interest in shares of a foreign company. Shares of A Incorporation, foreign company. Invest this in shares of a foreign company. Then this lady receives dividend from this foreign company. She receives dividend. These are all the facts. Now, there are two incomes this lady is getting. Number one is interest on FD. This interest on FD is to be clubbed under 64 subsection 1 class 4 in the hands of X, because this is an asset transferred by X to Mrs. X, okay, without consideration. So the income arising from such transferred asset should be included in the income sheet of Mr. X. It is club in the hands of Mr. X. It is clubbed in the hands of Mr. X. It is clubbed. and so in the hands of Mr. X. Come to the second income, dividend from A Incorporation. For this dividend, no exemption is available under 1034 since it is from a foreign company. It is from a foreign company, no exemption. Now the question is, it is taxable, correct? It is taxable under the head IFOS, no doubt. 56(2)(1). But in whose hands it is taxable? Is it taxable in the hands of this lady or in the hands of Mr. X? Should clubbing will come? Should clubbing provisions come? No. Section 64(1)(4) doesn't cover this. This is second generation income. This dividend is second generation income. This dividend is second generation income. What do we mean by second generation income? That means it is income arising from the transferred asset. It is not income arising from the transferred asset. This is income arising from investment made out of income arising from transferred asset. It is not income arising from transferred asset, it is income arising from investment made out of income arising from transferred asset. What could be clubbed is income arising from transferred asset and not second generation income. Not second generation income. So this you need to know. This is income arising from investment made out of income arising from transferred asset. This is income arising from investment made out of income arising from the transferred asset. So what could be clubbed is income arising from transferred asset and not second generation income, and not second generation income. This is point number 7. Point number 7. Point number 8. Mr. X gives 1000 shares in A Incorporation to Mrs. X. Thousand shares in A Incorporation to Mrs. X. A Incorporation, obviously a foreign company, is a foreign company. Then she gets 1000 bonus shares from the company. Issues 1000 bonus shares. Subsequently, the company pays her a dividend of rupees 10 lakhs. She gets a dividend of rupees 10 lakhs. This dividend of rupees 10 lakhs is attributable to two sets of shares. This dividend of rupees 10 lakhs is attributable to thousand original shares, as well as it is attributable to thousand bonus shares. It is attributable to 1000 original shares, and it is also attributable to 1000 bonus shares. Amount attributable to 1000 original shares is 5 lakhs. Amount attributable to 1000 bonus shares is also 5 lakhs. This 5 lakhs is income arising from transferred asset. This is income arising from the transferred asset. And this 5 lakhs is income arising from accretion to the transferred asset. Accretion to the transferred asset. This is income arising from accretion to the transferred asset. Income arising from transferred asset. Income arising from transferred asset should be clubbed under 6414. This is to be clubbed in the hands of X. This is to be clubbed in the hands of X. Income arising from accretion to the transferred asset, 6414 doesn't cover this. What could be clubbed is income arising from transferred asset, not income arising from accretion to the transferred asset. These 1000 bonus shares are what? Accretions to the transferred asset. This is. It is accretion to the transferred asset. So this cannot be clubbed. Can't be clubbed. This can't be clubbed. This is taxable only in the hands of Mrs. X. In the hands of Mrs. X. This you need to understand. This is point number 8. So what could be clubbed is income arising from transferred asset, not income arising from accretion to the transferred asset. So the dividend attributable to 1000 bonus shares is income arising from accretion to the transferred asset. Question of clubbing it doesn't arise. Point number 9. X is gifting gives shares in ABC Limited. This ABC Limited is a foreign company. Gives shares in ABC Limited, foreign company, to Mrs. X. Mrs. X gets dividend from ABC Limited. Then Mrs. X sells shares in ABC Limited to Y. Mrs. X sells shares in ABC Limited to Mr. Y. Now, the shares were purchased by X. Cost of acquisition of these shares 10 lakhs. Mr. X purchased it for 10 lakhs and he has gifted it to Mrs. X and she sells it, and it is sold for 110 lakhs. Consideration the consideration is 110 lakhs. The consideration is 110 lakhs. Now, in the hands of Mrs. X, there are two income. One is, let us take dividend. This dividend, obviously no exemption under 1034 because it is coming from a foreign company. No exemption under 1034. No exemption under 1034. Taxable under the head IFOS. Clubbing provisions will come. Clubbed in the hands of Mr. X. Clubbed in the hands of Mr. X, no doubt. Next is Madam transferred these shares Madam transferred these shares to Y. There will be capital gain on account of transfer of shares. Capital gain on account of transfer of shares. Capital gain on account of transfer of shares is rupees 110 lakhs minus 10 lakhs 100 lakhs. Capital gain on account of transfer of shares is 100 lakhs. This capital gain should it be clubbed in the hands of Mr. X? This capital gain is also income arising from transferred asset. This is income arising from transferred asset. So 64, 4 will come. It should be clubbed in the hands of Mr. X. Clubbed in the hands of Mr. X. It is clubbed in the hands of Mr. X. This is to be clubbed. So this you need to know. So capital gain arising from transfer of gifted asset should also be clubbed in the hands of Mr. X, because that is also income arising only from the transferred asset. When these shares are transferred by this lady, the resultant capital gain is also income arising from this transferred asset. That should be clubbed in the hands of Mr. X. See, what you need to basically understand is only one point. From the shares in ABC Limited, only dividend also comes, capital gain also comes. Dividend arises, capital gain arises. From the shares in the ABC Limited only dividend arises, capital gain also arises. Dividend arises on account of investment operation. On account of investment operation, capital gain arises on account of transfer operation. On account of transfer operation, but both are arising only from shares in ABC Limited, shares in ABC Limited. Shares in ABC Limited is the transferred asset. Accordingly, both should be clubbed. Accordingly, thus, both should be clubbed under section 64 subsection 1 class 4. Both should be clubbed under section 64 subsection 1 class 4. Both should be clubbed. So these are all the points. So what we are discussing is the issues in 64 subsection 1 class 4. Issue number 10. Issue number 10 we are going to discuss. Mr. X transfers shares in ABC Limited foreign company to Mrs. X, sells shares in ABC Limited foreign company to Mrs. X for a consideration of rupees 100 lakhs. For a consideration of rupees 100 lakhs. Whereas the fair market value of those shares is 200 lakhs. Fair market value of these shares how much? Is 200 lakhs. That means inadequacy in consideration is 50%. Inadequacy in consideration is 50%. Now, from ABC Limited, Madam gets dividend. Madam receives dividend say the dividend is rupees 10 lakhs. This dividend should be clubbed because dividend arises from the shares which were transferred by X to his spouse for inadequate consideration. Sorry. Okay. Amount of dividend to be clubbed in the hands of Mr. X. Amount of dividend to be clubbed under 64 subsection 1 class 4 in the hands of Mr. X is rupees 10 lakhs into 50 percentage 5 lakhs. Amount of dividend to be clubbed under 6414 in the hands of Mr. X is rupees 10 lakhs into 50% 5 lakhs. Is rupees 5 lakhs. That means, okay, from the transferred asset, if any income arises to the spouse, that income could be clubbed in the hands of the transferor individual only to the extent of inadequacy in consideration. Only to the extent of inadequacy in consideration. So the inadequacy in consideration is 50%. To that extent only it could be clubbed, not the entire income from the transferred asset. Point 11. Next is point number 11. Mr. X gives 100 lakhs to Mrs. X. Mr. X gives rupees 100 lakhs to whom? To Mrs. X. When? On 1st January 2020 is gifting 100 lakhs. What this lady does? This lady starts a business. This lady starts a business and the capital infused by her and the business started on 1st January 2020. On 1st January 2020 the business is started. Capital infused into this business. Capital infused is 200 lakhs. That means how this 200 lakhs came? From two sources. Own fund 100 lakhs, gift received from X. 100 lakhs gift received from X. She has used this 100 and 100 for starting the business. Then on 14 February 2020, X is giving another gift. This is gift 1, is making another gift of another 100 lakhs. This is on 14 February 2020. That is also pumped in by her into the business, into their business. This is infused as capital on the same date. This is infused as capital on the same date. This she has put into the business. So, first gift given, and she put her own money, started business with 200 lakhs capital. Then another gift come, that is also put into the business. Profits from business made during 1st January 2020 to 31st March 2020. Profits from business made during this period 30 lakhs. She has made a profit. She has made a profit of 30 lakhs. She has made a profit of rupees 30 lakhs. Now the issue is how this 30 lakhs is to be taxed. How this 30 lakhs is to be taxed. That means how much is to be taxed in the hands of Mr. X, how much is to be clubbed in the hands of X. Profit supra $30 lakhs. Amount to be clubbed in the hands of Mr. X. Amount to be clubbed in the hands of Mr. X. Amount to be clubbed in the hands of Mr. X. We need to first of all determine. How do we determine? This is nothing but profits into gifts from husband as on the first day of the previous year. As on the first day of the previous year, gifts from husband as on the first day of the previous year, divided by capital contributed by Mrs. X as on first day of the previous year. As on the first day of the previous year. This is how we are going to decide the amount to be clubbed in the hands of Mr. X. Amount to be clubbed in the hands of Mr. X is decided this way. First of all, the previous year for the business. The source business starts on the date on which the business is set up and it ends on the last day of that financial year. It ends on the last day of that financial year. So the previous year for the source business starts on the first day of the previous year and it ends it starts on the date on which the business is set up and it ends on the last day of that financial year. So therefore, the first day of the previous year in this case is 1st January 2020. 1st January 2020. So the profits how much? 30 lakhs. Gift from husband as on the first day of the previous year is what? 100 lakhs. Divided by capital contributed by her as on the first day of the previous year is what? 200 lakhs. 15 lakhs is to be clubbed. 15 lakhs is to be clubbed in the hands of Mr. X. I am not considering the second gift, but because it is not as on the first day of the previous year, it is not on the first day of the previous year. I shall take only in the numerator gifts from husband as on the first day of the previous year, and capital also is on the first day of the previous year. So this is also not considered in the numerator, and the capital contributed out of the gift is also not considered in the denominator. Both as on the first day of the previous year, that is important. Fine. Next is amount to be taxed in the hands of Mrs. X. Amount to be taxed in the hands of Mrs. X. Amount to be taxed is balance 30 lakhs minus amount clubbed in the hands of X is 15, balance 15 lakhs. That you need to note. Now, point number 12 or note. The illustration above the first gift was not given on first January 2020. Assume in the illustration above, the first gift was not given on 1st January 2020, but it was made on 1st February 2020. Then will the answer differ? This is the issue. Certainly the answer differs. Certainly the answer differs. How? I'll tell you. Profits from business 30 lakhs. Amount to be clubbed in the hands of Mr. X. Amount to be clubbed in the hands of Mr. X. How do we decide? Simple. Just now I told you. Profits into gift from husband on the first day of the previous year 0. Capital infused as on the first day of the previous year. Earlier we assumed, I was telling you that she introduced 200 lakhs capital. That 100 out of her own funds, gift from husband 100, 200. See, introduce capital of 200 out of own funds of 100 lakhs, gift from husband of 100 lakhs. Now, on first day, gift has not come from husband, only own funds is introduced as capital. So, on the first day of the previous year, capital contributed is only 100. So, therefore, nothing is to be clubbed. Nothing is to be clubbed. Amount to be taxed in the hands of Mrs. X is rupees 30 lakhs. Amount to be clubbed in the hands of Mr. X is 0. Why? Numerator here is what? Gift from husband on the first day of the previous year. Nothing is given. Capital contributed by Mrs. X now could not be 200 because gift has not come from husband. She has only put 100 lakhs her own funds. So the denominator is 100. So 0. So therefore entire 30 lakhs is to be clubbed only in the hands of, should be taxed only in the hands of Mrs. X. Mrs. X. Now, point number 12. Point number 12. What is point number 12? Listen. Mrs. X, Mrs. Y, both come together and they start a partnership. They float a firm. They create a partnership. They float a firm. So they are having 50% stake. 50% stake. Now the capital contributed by this lady is 200 lakhs. And she also contributes a capital contributed is 200 lakhs. They are equal partners. Contribution of capital is also equal. This is first point. But how this lady got 200 lakhs? Own funds 100 lakhs. Gift from ex-husband 100 lakhs. Gift from husband 100 lakhs. Here also own funds 150 lakhs. Gift from husband 50 lakhs. Gift from husband 50 lakhs. This is how they mobilize the funds for contributing capital into the firm. Next is from the firm Mrs. X gets interest, remuneration and share income. Similarly, Mrs. Y is also getting interest is 10 lakhs, remuneration is also 10 lakhs, this lady also gets interest of 10 lakhs, remuneration to her is 20 lakhs, share in profits 30 lakhs, share in profits 30 lakhs. So these are all the benefits the partners are getting from the firm. Now listen to me. Share in profits, these are exempt under 10(2)(a). These are exempt under 10(2)(a). Not at all taxable. Therefore, question of clubbing in the hands of Mr. X or Mr. Y doesn't arise. Therefore, the question of clubbing it in the hands of Mr. X and Mr. Y doesn't arise. This lady has contributed capital, 100 lakhs out of gift from husband. This lady has contributed capital of 50 lakhs out of gift from husband. So a portion is to be clubbed in the hands of husband. This will not come for share in profits because it is exempt, not taxable. It is exempt, not taxable. Come to remuneration. Remuneration is a reward for services. Remuneration is a reward for services and not for funds committed. Not for funds committed. Remuneration is a reward for services and not for funds committed. Funds committed. So therefore, since it is not attributable to funds, this much funds came from husband, so a part of the remuneration should be clubbed in the hands of husband. That question doesn't arise. Therefore, no question of clubbing any part of it in the hands of Mr. X and Mr. Y, it is fully taxable only in the hands of Mrs. X and Mrs. Y. It is fully taxable in the hands of Mrs. X and Mrs. Y. This is fully taxable in the hands of Mrs. X and Mrs. Y. In the hands of Mrs. X and Mrs. Y. So question of clubbing doesn't arise. Number 3, interest. Is a reward for the funds committed. Reward for the funds committed. A part of the funds infused as capital is out of gift from husband, is out of gift from husband. A part of the funds infused as capital is out of gift from husband. So, interest is to be clubbed on a proportionate basis. Therefore, interest is to be clubbed in the hands of Mr. X and Mr. Y on a proportionate basis. On a proportionate basis. We will do the computation on a proportionate basis. First, interest to Mrs. X. Interest to Mrs. X 10 lakhs. See, this is for the capital contribution of 200 lakhs, correct? Adile capital contribution funded by own funds 50%, funded by gift from husband 50%. So therefore, in this case, ₹5 lakhs clubbed under 6414 in the hands of X 50%. Balance 5 lakhs taxed in the hands of Mrs. Y. Taxed in the hands of Mrs. X. Is taxed in the hands of Mrs. X. Similarly, interest paid to Mrs. Y. Interest paid to Mrs. Y is what? 10 lakhs. And if you see, this 10 lakhs is interest on capital of 200 lakhs. Adala 3/4 okay represents what? Own funds. 25% represent gift from husband. Gift from husband. $2.5 lakhs is clubbed under 6414. In the hands of whom? Y. Balance 7.5 lakhs is taxed in her hands. Balance is taxable in her hands. Her means Mrs. Y's hand. So share in profits is exempt. So question of clubbing doesn't arise. Remuneration is a reward for services. So question of clubbing doesn't arise. Interest is only to be clubbed because it is a reward for the funds committed. So the presentation is this: X, Mrs. X, Y, Mrs. Y. Interest 5 lakhs, 5 lakhs, 2.5 lakhs, 7.5 lakhs. Remuneration, fully it is the income of Mrs. X and Mrs. Y, 10 lakhs and 20 lakhs. It cannot be clubbed only. Next is share in profits. It is exempt. This is the summary we should keep in mind. So what we are discussing is various issues in 64 subsection 1 class 4. Sorry, we enter into the next class, section 64, subsection 1, class 6. 64, subsection 1, class 6. Section 64, subsection 1, class 6. There is an individual. The individual transfers his capital asset, transfers an asset to son's spouse that is daughter-in-law to son's spouse it is transferred, daughter-in-law. Transfers asset. It is transferred directly or indirectly. Transfers asset directly or indirectly. And the transfers the asset for otherwise than for adequate consideration. Otherwise than for adequate consideration. Transfers the asset otherwise than for adequate consideration. There is an individual is transferring asset to his son's spouse, that is daughter-in-law, and the transfer may be direct or indirect, and it is otherwise than for adequate consideration. From the transferred asset, income arises. Income arises to daughter-in-law. Income arises to daughter-in-law. This income shall be clubbed in the hands of transferor individual. Clubbed in the hands of transferor individual. It is clubbed in the hands of transferor individual as per which section? 64, subsection 1, class 6. Subsection 1, class 6. Now, I'll give you an example. See, X, Mrs. X daughter-in-law, 3 persons. X, Mrs. X daughter-in-law. X is gifting fixed deposit of 100 lakhs. Worth 100 lakhs on 1st April 2019. On 1st April 2019. From bank, madam gets interest. No doubt, this interest will be clubbed in the hands of X. This is clubbed under 64(1)(4). It is clubbed. No issue, no doubt. This is clubbed for the previous year 1920. It is clubbed in the hands of X. Then this lady, she doesn't hold the gift, she hold the fixed deposit, gives this fixed deposit to daughter-in-law on 1st April 2020. On 1st April 2020. Then from the bank, daughter-in-law will receive interest. And this interest should also be claimed only in the hands of Mr. X, not in the hands of Mrs. X. This is club under 64(1)(6). In whose hands? In the hands of X. For the previous year 2021. Reason enna, okay, this is an indirect gift to daughter-in-law. Okay, listen to me. Fixed deposit of rupees 100 lakhs is gifted indirectly to daughter-in-law through Mrs. X as a conduit pipe or a medium. Is gifted indirectly to daughter-in-law through Mrs. X as a conduit pipe or a medium. Therefore, interest pertaining to previous year 2021 shall be clubbed only in the hands of Mr. X under 64(1)(6). 64(1)(6). So this is an example for indirect transfer to daughter-in-law. Indirect transfer to daughter-in-law. Next is section 64 subsection 1 class 7. 64 subsection 1 class 7. There is an individual he transfers an asset otherwise than for adequate consideration to a person or association of person. See, there is an individual, the individual transfers an asset to a person or association of person otherwise than for adequate consideration. Otherwise than for adequate consideration. And this transfer of asset is for the immediate or deferred benefit of the spouse of the transferor individual. It is for the immediate or deferred benefit of the spouse of the transferor individual. It is for the immediate or deferred benefit of the spouse of the transferor individual. Then the income arising from the transferred asset to the extent to which it inures to the benefit of spouse income arising from the transferred asset income arising from the transferred asset to the extent it inures for the benefit of income arising from transferred asset to the extent it inures for the benefit of the spouse of the transferor individual, for the benefit of the spouse of transferor individual shall be clubbed in the hands of transferor individual in view of section 64 subsection 1 class 7 in view of section 64 subsection 1 class 7 shall be clubbed in the hands of transferor individual in view of section 64 subsection 1 class 7. That you need to note. Fine. To visualize an example I am giving, Mr. X is creating a trust. X creates a trust for whose benefit? For the benefit of beneficiary number 1, Mrs. X. Beneficiary number 2, sister of X. Extent of benefit 80% of income should be applied for Mrs. X. 20% should be applied for sister of X. Creates a trust. To that trust, Mr. X transfers fixed deposit worth 100 lakhs. Fixed deposit worth 100 lakhs. Then from the bank, the trust gets interest of rupees 10 lakhs. This 10 lakhs, what is the treatment? Interest of 10 lakhs bifurcated into two parts. Rupees 8 lakhs amount to be applied for the benefit of Mrs. X. Amount to be applied for the benefit of Mrs. X as per the trustee deed. This 8 lakhs is clubbed in the hands of X in view of 6417. In view of 6417. Rupees 2 lakhs taxed in the hands of the trust. Taxed in the hands of trust. No clubbing. So one line summary of the entire discussion is, where an individual transfers any asset otherwise than for adequate consideration to any person or association of person, and the transfer is for the immediate or deferred benefit of the spouse, then the income arising from the transferred asset to the extent, okay, it inures for the benefit of the spouse of the transferor individual shall be clubbed in the hands of transferor individual. It should be clubbed in the hands of transferor individual. Next is section 64, subsection 1, class 8. Section 64, subsection 1, class 8. What is that? There is an individual he transfers an asset to any person or association of person. He transfers an asset to any person or association of person. Otherwise than for adequate consideration. Otherwise than for adequate consideration, and it is for the immediate or deferred benefit of daughter-in-law. It is for the immediate or deferred benefit of spouse, of son's spouse. Then income arising from the transferred asset income arising from the transferred asset then the income arising from the transferred asset to the extent it inures for the benefit of son's wife, son's spouse, shall be clubbed in the hands of transferor individual, in the hands of transferor individual. This is in view of 64 subsection 1 class 8. This is in view of section 64 subsection 1 class 8. Everything same here. Anga spouse, inga son spouse, that's all. With this, we are through with section 64 subsection 1 class 8. That means we are through with section 64 subsection 1. Now we enter into section 64 subsection 1a, subsection 1a. (64) 1a deals with clubbing of income of minor child, clubbing of income of minor child. What it says? Income accruing or arising to a minor child any income accruing or arising to a minor child shall be clubbed in the hands of parent, shall be clubbed in the hands of parents. The hands of parent. Which parent I will tell you. And the parent in respect of such clubbed income enjoys exemption under 1032. Note. In respect of such clubbed income, in respect of such clubbed income, the parent enjoys exemption under 1032, exemption under section 1032. Enjoys exemption under 1032. We will come to 1032 exemption subsequently. We need to now decide income of the minor child should be clubbed in the hands of which parent. Income of minor child should be clubbed in the hands of which parent we need to address. We need to catch which parent. Listen, marriage of the parents doesn't subsist. Parents are living together or they are living separately. Marriage of parents doesn't subsist. Marriage of parents subsists. Marriage of parents doesn't subsist. Doesn't subsist. They are not living together. Divorce. Marriage of parents doesn't subsist. Na simple. Parent who takes care of the child during the previous year. Parent who takes care of the child during the previous year. When marriage subsists, then there are two possibilities. Total income of father is more than total income of mother. இங்க total income of mother is more than total income of father. It is more than total income of father. There are two situations. In this situation, we shall catch whom father. It should be clubbed in the hands of father. Here we shall catch whom? We shall club it in the hands of mother. Okay, which parent is having more total income? With that parent it is clubbed. So we have decided, okay, which parent should be caught. Fine. Next is, there are some exceptions. There are some exceptions, that is, clubbing provisions will not come. In the following circumstances, in the following circumstances, in the following circumstances, the provisions of section 64(1)(a) shall not apply The following circumstances, the provisions of 64(1)(a) shall not apply. Hence, no clubbing. Hence, no clubbing. Where minor child is disabled, if the child is disabled, suffering from disability referred to in 80U, we'll discuss in chapter 6a, is disabled, then income of the child will be taxed only in the hands of the child. Question of clubbing in the hands of parent doesn't arise, and the legal formality should be complied with by the guardian. Circumstance number 2. Minor child earns income from manual labor from manual work. So question of clubbing doesn't arise. It is to be taxed in the hands of the child. Legal formality should be complied with by the guardian. Minor child earns income by exercise of skills, talents, knowledge and experience. Here also clubbing provisions will not apply. The income should be taxed in the hands of the child only. But formalities are to be complied, legal formalities are to be complied with by the guardian. These are all the cases. Income of the child will be taxed in the hands of the child, not in, it will not be clubbed in the hands of the parent. In the hands of the parent. Now, there are some issues, points requiring attention. Points requiring attention. Child is defined to mean child includes adopted child, if the couple is not having any children they are adopting, even the income of this adopted child should be clubbed. Child includes stepchild. Child includes stepchild. Example for this: X through wife 1 is getting a child master A through wife 1 is getting child we call master A, and this lady dies. So this man marries again, there is wife 2. Now total income of wife 2 is more than total income of X. Then income arising to master A shall be clubbed in the hands of wife 2 under 64 1A. Under 64 1A, it should be clubbed under section 64 1A. Income arising to master A shall be clubbed in the hands of wife 2 under section 64 1A. Why? Because child includes stepchild. For her, master A is a stepchild. Master A is a stepchild. So that you need to note. This is point number 1. Point number 2. There is fixed deposit of rupees 100 lakhs with Indian Overseas Bank. There is fixed deposit of 100 lakhs with Indian Overseas Bank in the name of Master A. The name of Master A. It is in the name of Master A. From such deposit, arises interest of rupees 10 lakhs. There arises interest of rupees 10 lakhs. Arises interest of rupees 10 lakhs. Now, Master A attains majority on 1st October 2019. On 1st October 2019, then this interest of rupees 10 lakhs should be bifurcated into two parts. interest attributable to the period of minority, interest attributable to the period of minority, to the period of minority, interest attributable to the period of majority, attributable to the period of majority. Interest attributable to the period of minority 6 months. Period of majority is also 6 months. This interest is how much? 5 lakhs and 5 lakhs. On this 5 lakhs shall be clubbed under 64 1A in the hands of parent. It shall be clubbed in the hands of the parent. This 5 lakhs is taxed in the hands of A, who has attained majority. Who has attained majority. Taxed in the hands of A, who has attained majority. So from this, what we consolidate is only income attributable to the period of minority could be clubbed. This is point number 2. Point number 3. Master A Master A Master A is a child artist. Acting in various films and TV serials. Acting in movies, in TV serials. Income from acting earned during previous year 1920 is 20 lakhs. Interest on fixed deposits made out of income from acting acting of earlier years. Interest on fixed deposit made out of income from acting of earlier years. Rupees 5 lakhs. Rupees 5 lakhs. இதில் 64(1)(a). Here clubbing will not come because this is by exercise of skills, talents, knowledge and experience. But this could be clubbed. This is to be clubbed. Why? This interest is on account of placing money in FD, not on account of manual work and not on account of exercise of skills, talents, etc. This could be clubbed. This could be clubbed. This is not on account of exercise of skills. This is on account of placing money in deposit, money in fixed deposit. So therefore this should be clubbed and this cannot be clubbed, this cannot be clubbed. So this you need to note. Next is point number 4. Exemption under 1032. Exemption under section 1032. You all know this exemption is available to the parent in whose income sheet income of the minor child is clubbed. Available to parent available to parent in whose income sheet the income of the minor child is clubbed. The income of the minor child is clubbed. Available to parent in whose income sheet income of the minor child is clubbed. This is available in respect of income club. In respect of income clubbed. Note 1, where the quantum of exemption is the income clubbed are 1500, whichever is less. Income clubbed are rupees 1500, whichever is less. Income clubbed are 1500, whichever is less. That is the quantum of exemption. Note 2, where multiple more than one income of minor childish club where more than one income of minor childish club, then the quantum of exemption is is aggregate of income clubbed are rupees 1500, whichever is less. Note 3. Exemption is available under 1032 in respect of income of each minor child club where income of multiple minor children are club, with that of the parent, where income of multiple minor children are clubbed with that of the parent, exemption under 1032 is available. Exemption under 1032 is available in respect of income of each minor child club, clubbed, where income of multiple children are clubbed with that of the parent. Exemption under 1032 is available in respect of income of each minor child club. That means we can say 1500 per child, where income of multiple minor children are clubbed with that of the parent. Exemption under 1032 is available in respect of income of each minor child clubbed. That you need to note. Fine. Point number 5. Where X transfers house property X transfers house property to his minor child, otherwise than for adequate consideration. Otherwise than for adequate consideration. Otherwise than for adequate consideration. In this, and the minor child is not a married daughter, not being married daughter transfers house property to the minor child not being married daughter, otherwise then for adequate consideration. Then Mr. X is deemed owner annual value of the house property is taxed in his hands. Annual value of the house property is taxed in his hands. Of house property is taxed in his hands. This is because of 27 class 1, 64 1A has no role to play. This is not at all income of the child. This is deemed to be the income of the parent who transferred it. Clubbing will not come. Where section 27 is invoked, and the annual value is taxed in the hands of transferor parent. Exemption under 1032 is not available. Exemption under section 1032 is not available. Exemption under 1032 is available only when we invoke clubbing provisions. When we deem the transferor parent as the owner in view of 27(1) and we tax the annual value in the hands of that parent, we don't club. So therefore exemption is not available. Exemption is not available. Note, where the house property is transferred for inadequate consideration, where the house property is transferred for inadequate consideration, to his married minor daughter. Married minor daughter. Section 27 class 1 has no role to play. (64) 1A will get invoked. Income from the transferred house property income from the transferred house property shall be clubbed under 64 1A in the hands of parent having more total income. In the hands of parent having more total income. Exemption under 1032 is available. Parent supra is entitled to Exemption under 1032. Entitled to exemption under 1032. Note 64(1)(a) doesn't distinguish the minor child into married daughter and others. Doesn't distinguish. So even if the child is married daughter, minor daughter, 64(1)(a) could be invoked. This is note 1. Note number 2. So in this case, 64(1)(a) clubbing can come. That you need to note. Next is X transfers his house property to master A, son, disabled, suffering from disability referred to in 80U. Transfers house property for inadequate consideration. Transfers house property for inadequate consideration. This is a case where we will invoke 27(1), not 64(1)(a). 64(1)(a) will not come. What will come is 27(1). X is deemed to be the owner. Annual value is taxable in the hands of X. Annual value is taxable in the hands of X no exemption under 1032. No exemption under section 1032. There will be no exemption. So the point to be noted is section 27 class 1 doesn't distinguish the minor child into disabled and others. Disabled and others. So these points you need to note. With this, we are through with 64 subsection 1. A, 64 subsection 1A. finally we do have in 64 subsection 2 we have what? 64 subsection 2. What happens? A member transfers his personal property to his HUF. Transfers his personal property to his HUF without consideration or for inadequate consideration. Without consideration or for inadequate consideration. Without consideration or for inadequate consideration, transfers the house property. Then income arising from the transferred asset income arising from the transferred asset shall be clubbed in the hands of transferor member income arising from the transferred asset shall be clubbed in the hands of transferor member, where it is given 64:2. This is one situation 1. There is at another situation this Hindu undivided family gets partition. The HUF undergoes partition. The transferred asset supra means above. The transferred asset supra, that is the asset transferred by the member to the HUF, is given to the spouse of transferor member. It comes to the spouse of transferor member. It comes to the spouse of transferor member. Then income arising from such transferred asset shall be still clubbed in the hands of transferor member. Shall be clubbed in the hands of transferor member in view of section 64(2). It should be clubbed in the hands of transferor member. So even after partition, the income from the transferred asset, though earned and enjoyed by the spouse of the transferor member, will be still included in the income sheet of transferor member because it is going to the spouse of the transferor member. So where a member transfers his personal property to his chief without consideration or for inadequate consideration, income from the transferred asset shall be clubbed in the hands of transferor member. After partition of the HF also, if that asset goes to the spouse of the transferor member, income arising from the transferred asset should still be included only in the income sheet of transferor member, in the hands of transferor member. With this, we are now through with 64. We are through with section 64. We'll stop here. We'll continue in the next class.